Elon Musk. What does this boy have up his crypto sleeves? Everyone knows now, especially the woke supposed liberals, that Elon Musk is taking control of Twitter, removing it from public company status to a private company. So is this just a knee-jerk reaction, midlife crisis buy, or is there a much bigger plan? Well, we'll find out in about 10 minutes because it's time for Chico Crypto. Well, to be fair, this isn't a knee-jerk reaction. Elon actually talked about buying Twitter all the way back in 2017. He tweeted he loves Twitter, and a guy replied that he should buy it. Elon replied, "How much is it?" So, it's been in his bag of tricks for 4.5 years. Now let's just look at a recent timeline of what caused him to pull the buy trigger. March 14th of this year, Elon accumulated a 5% stake in the platform. 12 days later, on March 26th, he tweeted, "Is a new platform needed?" insinuating he was thinking about creating a Twitter alternative. Just over a week later, he increased this position to over 9%. 5th of April, Musk is announced joining the Twitter board. Just 5 days later, on April 10th, he is denied from joining the board. 4 days later, on the 14th of April, he offered to buy Twitter for $43 billion. And just 11 days later, on April 25th, the offer was accepted. Now remember, it was March 14th when he first accumulated a stake in Twitter. Guess what Elon tweeted just 2 days after his initial buy of Twitter shares? He tweeted, "Working on master plan, part 3. Looking back, it seems highly likely this was either his infiltration or full-on takeover of Twitter was part of the master plan. But what does this have to do with Bitcoin and crypto? Well, Chico Crypto suspects a lot. So we gotta go back in history to see what he could be planning for Twitter in regards to crypto. Well, first of all, he is planning on sticking to the ethos of decentralization, crypto, and open source projects. Just back on March 24th, he put out a poll asking if the Twitter algorithm should be open source, and the results were overwhelmingly yes. Is he looking to decentralize Twitter? Well, the first step in that process would be making the algos open source. Well, there's this too. Former CEO and founder of Twitter, Jack Dorsey, was trying to do just this when he was at the helm of running the show. Jack Dorsey, on December 19th, 2019, tweeted, "Twitter is funding a small independent team of up to 5 open source architects, engineers, and designers to develop an open source and decentralized standard for social media. The goal is for Twitter to ultimately be a client of this standard." Twitter was so open early on that many saw its potential to be a decentralized internet standard like SMTP, the email protocol. For a variety of reasons, all reasonable at the time, we took a different path and increasingly centralized Twitter. But a lot's changed over the years. He then says in the thread, "Finally, new technologies have emerged to make a decentralized approach more viable. Blockchain points to a series of decentralized solutions for open and durable hosting, governance, and even monetization. Much work to be done, but the fundamentals are there." Square is doing exactly this for Bitcoin with Square Crypto. For social media, we'd like this team to either find an existing decentralized standard they can help move forward, or failing that, create one from scratch. That's the only direction we at Twitter Inc. will provide. Well, what happened just a few months after this tweet? Late February 2020, key investors in Twitter bought up shares and were seeking to oust Jack Dorsey as the CEO. Well, he bought himself some time and thwarted that attack. But a year and 10 months later, in November of 2021, Jack Dorsey stepped down as CEO. The plan for decentralizing Twitter vanished, and centralization and censorship ramped up on the platform. Now, everyone should know Elon Musk, the new Twitter private owner, and Jack Dorsey have been, and still to this day, are extremely good friends.
Did we just become best friends? Yup!
February of 2019, Jack was asked who is the most exciting and influential on Twitter, of which Jack replied, "To me personally, I like how Elon Musk uses Twitter. He's focused on solving existential problems and sharing his thinking openly. I respect that a lot, and all the ups and downs that come with it." Of which Elon replied, "Thanks, Jack. Twitter rocks." Then in early 2020, January to be exact, at a Twitter company event, Jack Dorsey brought Elon onto a video call and asked him how he would run Twitter. From the article, we can see Jack asked, "What are we doing horribly? What could we be doing better? What's your hope for Twitter's potential as a service?" And even asked jokingly then, "By the way, do you want to run Twitter?" Obviously, Jack trusted Elon back then, and they were close enough to be calls away in early 2020. But when Jack was almost ousted as the CEO, just a few months later in 2020, Elon came to his rescue. He tweeted during the heat of it, "Just want to say I support Jack as Twitter CEO. He has a good heart."
Honey.
The bromance was strong, and obviously Jack could see Elon eventually running Twitter. Well, that's a reality now. So what are Jack's thoughts on it? Well, Jack spoke on this just last week. He said, "In principle, I don't believe anyone should own or run Twitter. It wants to be a public good at a protocol level, not a company. Solving for the problem of it being a company, however, Elon is the singular solution I trust. I trust his mission to extend the light of consciousness. The singular solution I trust. But in principle, he doesn't believe anyone should own or run Twitter. AKA Jack still thinks Twitter should be decentralized." So the next question is Elon going to bring back Jack Dorsey? And will they be decentralizing Twitter? Well, you don't want to miss what's coming, but before we get into that, it's time for a sponsored segment of this video, brought to you by the Drops DAO. And like always, the full details of our agreement can be found in the description. 2021 was the year of NFTs, which saw an explosion in trading volume and user adoption. NFT sales generated over 23 billion in trading volume, up from just 100 million in the year before. And the number of unique wallets that held an NFT went from 5,000 to over 140,000 wallets by the end of 2021. And user adoption hasn't slowed down one bit with the advancement of GameFi and the metaverse. So, were you one of the tens of thousands that rode the NFT wave last year? Or perhaps you're just now exploring NFTs, GameFi, and the metaverse? Whether you're new or have a $1 million NFT portfolio, the same is true for all. Your NFTs have a financial market value. But if all you're doing is collecting and holding your NFTs, those pretty little JPEGs simply serve as decorations, letting their intrinsic value go to waste as they sit idle in your wallet. Drops DAO recognized this untapped potential and saw the opportunity to transform these idle assets into attractive financial vehicles. Drops DAO is building a permissionless, trustless, and multi-chain infrastructure needed to help drive the metaverse finance movement forward, taking NFTs to the next level beyond artwork. Drops DAO aspires to empower people across the metaverse and NFT landscape to easily and conveniently access on-chain liquidity by providing instant loans for your JPEGs, NFTs, and metaverse assets. Drops DAO lets anyone use NFTs as collateral to obtain loans through lending pools, and they also allow users to leverage their idle DeFi tokens to use as collateral and obtain loans too. This new phenomenon of using NFTs as collateral opens the door for both lenders and borrowers. Lenders earn a variable interest rate for providing to pools, and borrowers can now access instant liquidity without giving up ownership of their assets, and can use the borrowed capital to speculate on other NFTs, purchase other cryptos, or generate an income through yield farming opportunities. And both lenders and borrowers earn the Drops governance token, DOP, as an additional incentive for lending or borrowing. So as a borrower, you not only get to leverage your idle assets to extract more value from the market, but you also get paid in DOP to do it. And getting a loan is seamless and instant. Users browse existing NFT pools or create a new one for which any NFT collection can be used. And Drops recently partnered with Chainlink to access their NFT floor price oracle, ensuring the most accurate and up-to-date NFT values, allowing users to borrow up to 60% of the NFT's value. And for those worried about liquidations, Drops loans do not expire, and if the borrowing limit isn't surpassed, you will always stay liquid. Furthermore, Drops wants everybody to win and clearly communicates collateral ratios and limits to ensure users don't get overextended. Drops DAO has been tirelessly working behind the scenes and building and testing their protocol, and are actively offering handsome APYs for staking and LP providing. Users can also currently borrow against or provide liquidity for their permissionless loans platform using a number of DeFi tokens. With the continued explosion of the NFT marketplace, Drops DAO is perfectly positioned to become the leading NFT and DeFi platform in the space, and you have a front seat ticket to join the ride before the big boom. So make sure to visit their website and check out their app and follow their Twitter. If you have any questions and to follow along, join their Discord and Telegram. Links for everything Drops DAO can be found in the description. Now back to that decentralizing Twitter with Jack and Elon. There is some proof out there that says Jack is coming back. Zero Hedge tweeted this on Monday of this week. Musk in talks with major Twitter investors, including Jack Dorsey, about rolling their stake into the Twitter deal instead of cashing out. This would mean ownership in the private company in the form of common or preferred equity. Jack Dorsey would still be in the Twitter game, having actual ownership of Twitter still, and a large chunk to boot, as Jack is the largest individual shareholder of Twitter stock, behind only Elon Musk. So there is a high possibility Jack is being brought back on the board in some form, and Jack wants Twitter decentralized. Does Elon? Well, in January of this year, in regards to artificial general intelligence, AGI, and Tesla, Elon said this about his company: "We'll do our best. Decentralized control of the robots will be critical." Will decentralized control of Twitter be critical? Me think so. And it's part of his master plan in conjunction with Jack Dorsey. Now, if we go back to the Jack Dorsey tweet thread on open sourcing and decentralizing Twitter, he talks of blockchain providing open and durable hosting, governance, and monetization. Now, if you know anything about governance and blockchain, the only way to do that is through a token, a governance token. Now, at the very end of his thread, he said, "This isn't going to happen overnight. It will take many years to develop a sound, scalable, and usable decentralized standard for social media that paves the path to solving the challenges listed above. Our commitment is to fund this work to that point and beyond. We're calling this team Blue Sky." Twitter began funding a project to do this, Blue Sky. So the first question is, are they still funding it? And will it continue with the Musk takeover? Well, Blue Sky put out a tweet thread clarifying just that last week. They said, "Given the surge of interest in Twitter's future, we thought this would be a good time to clarify the relationship between Blue Sky and Twitter. Blue Sky has received $13 million to ensure we have the freedom and independence to get started on R&D. Former Twitter CEO Jack is on our board, and a former Twitter security engineer has joined the team. Twitter's funding of Blue Sky is not subject to any conditions except one, that Blue Sky is to research and develop technologies that enable open and decentralized public conversation. Jack is on the board. Twitter is still funding Blue Sky. So what is happening recently with the project? Well, it seems they are going all in with decentralized technology all-stars. They posted their recent hires March 31st of this year, and it included Daniel Holmgren, a protocol engineer with previous experience developing on IPFS, and Jeremy Johnson, first employee at Protocol Labs and lead engineer on IPFS and Filecoin. It looks like they're going all in on IPFS, a decentralized file storing and sharing protocol. Well, we can confirm this by going to the Blue Sky website homepage and clicking on their ecosystem review. We can see they are exploring IPFS, and IPFS is the home to the most decentralized social networks already. But what about a token? Well, as mentioned, if governance was going to come into play, they would need a Twitter token. And scrolling down, we can see Blue Sky has a section on governance. Blue Sky is thinking about a token. Blue Sky is funded by Twitter with Jack on the board. Twitter is now in the hands of Elon Musk. You do the math, but Chico thinks a Twitter token is coming soon. Cheers, viewers. I'll see you next time.